Alright guys, let's get started. Welcome to another episode of Crypto Corner, your crypto radar for all the latest news, reviews, market analysis and tutorials that help you master the crypto markets. By the way, in my next video I'm going to show you a tutorial. I'm going to do a unpacking and setting up of my brand new NFT hardware wallet, Nifty. It's called SecuX Nifty. It is the first hardware wallet, so make sure that you catch this one. Now let's talk about the markets and XRP in particular, because as the markets are down, something that we've expected, I charted Bitcoin and Ether in my previous analysis. I didn't really talk about XRP, and XRP has been pumping quite a lot for the last week. It's right now it's almost 53% up on the weekly. At some point earlier yesterday, it was around 60% up on the weekly. And I did some digging. Not many people were talking about this, but I did some digging. And I found this tweet which actually explains why we are seeing this bullish price action. Apparently, a unknown whale purchased over $500 million worth of XRP. This happened a few days ago, and since then, XRP has been pumping. Is it going to continue pumping? I'm going to do technical analysis at the end of this video, so stay tuned. Of course, I'm going to also do technical analysis on Bitcoin and Ether, because everyone is wondering right now, where is this going? Are we going to continue going down, or are we ready, to recover, to start the recovery phase? Bitcoin is pretty much the same price as yesterday. However, Ethereum is experiencing a slight recovery, but then again, Ethereum did drop much more than Bitcoin over the last week. As you can see here on the weekly, Ethereum is down 11%, while Bitcoin is down only 3.5%. So definitely Ethereum needs to do much more recovering if it is to go to previous highs. In Bitcoin value right now, Ether is 0.070. And it did go down to 0.068, I think yesterday, over the last couple of days. So this is quite low. In compared to recent highs, we were at 0.080 in terms of Bitcoin value with Ether. So definitely this is quite a drop. But of course, after the merge, we expected this kind of a drop. Now let's go into the charts and take a look at Ethereum, Bitcoin and XRP. I'm gonna try and answer your questions. Is it a good time to jump into XRP? I've seen already quite a few claims that XRP is going to continue this bull run, going to go to $1 and above and everything. I beg to differ. Let's take a look. Alright, so we're starting with a quick comparison here between Bitcoin and Ether. This is on the 12-hour time frame. They have a very similar performance over the last week. Both of them have fallen below the 50th and the 9th moving average. And here as well, this is Ether, which is a bearish indicator. This bearish cross here that we see in the 9th and the 50th moving average is visible on both of them, both charts. Also, both of them went to almost their lowest support here. Bitcoin went to 18,000. It didn't touch the 17,500 support. This is the lowest one that I have here. Same for Ether. It actually went down. It broke the 1,300 support level. It went to 12. Let me just see exactly what did we touch? 1218. And Bitcoin, as it broke this 18,500 support level, it actually dropped to 18,150, let's say. All right, so these are the quick stats. Now, this is where the things are looking similar. Not only actually, we see that the volume started picking up as we broke this support line, as we broke here this support line as well. The volume picked up, which indicates that these levels are acting as quite a decent support, at least for the moment. In Ether, this support level is 1200. With Bitcoin, this support level is 18,000. We didn't actually break below it. There is still a chance that we will, but for the moment this support is holding us. Now let's quickly go on the daily and see slightly longer term, because I'm not really that bothered about the short term. In Bitcoin, the daily shows an oversold stochastic Rsi. Ethereum shows oversold stochastic Rsi. Actually, Ethereum's Rsi is already starting to go on the upside, and it's printing this bullish cross here. So a bounce on the upside is to be expected. We do have a few areas of resistance now. Let me actually switch to Ether and then we're going to continue with Bitcoin. We have a few resistance levels here that we will need to challenge right now. I'm going to make them red because these used to be support levels. They used to be green. No longer the case though. So these are the three levels that we will need to conquer if we are to come out of this lower region. And if we want to challenge that 50th daily moving average, which is very important, this is going to show us a bullish indication. We need to conquer this 50th moving average. On the way up, we do have a first stop at, well, pretty much here where we got rejected. We came to 1349 and then we got rejected. So that remains a resistance. We'll have to conquer that one. Then we have a higher resistance at 1422 and another resistance at 1465, 1470, around there. These will be the challenges that we'll need. These are the price levels that I'm watching right now. If we get rejected again, I mean, we will try and conquer that 1350. If we get rejected again, this is going to be quite bearish. It means that we are weak, the buyers are weak, a lot of selling pressure is coming at this level, and we are getting rejected from there. However, we only challenged it yesterday and today we started from there, but we got a rejection, so it's a little too soon to write it off. We still have a chance to actually go above this level, break above this level and reclaim at least the 9th moving average, which will be good for us. The markets are also on the lower end. They are starting to get tighter. We see a slight curve here in the blue one, so hopefully we are going to continue seeing the blue line over the next couple of days curving on the upside, starting to go higher so that it can cross here with the red one, make that bullish cross that we see here. For instance, this is the kind of cross that I want to see in the markets, and I feel that we are on the way to do that. So it's possible that over the next few days we reclaim, this is the most likely scenario to me, we reclaim this first resistance and we start challenging the second resistance level. This, from the indicators that I'm watching here, this is what I can see. Also, as we are dropping in price, and this is on the longer time frames, as the price was going down, the volume was also going down, which is a bullish indicator. So this could indicate that we are starting now a bit of a recovery. I do feel that the volume is still quite weak and I'm not expecting a strong recovery. I'm not expecting a bull run. No way. I feel that we are not ready for it. So for the moment, we are remaining most likely in a consolidation period. We will be hovering around this support and resistance levels for a while, and possibly over the weekend this is what we are going to be doing. But bear in mind that weekends are great for manipulators, so we could see another dump during the weekend. This is also possible, another push on the downside that could easily take us to that support level of 1195, 1200. So this remains a possibility. Let's see what the weekend is going to show us. I don't really like to trade during weekends very much unless we have a strong trend. For the moment, we don't really have a strong trend. We're still in a downtrend. We're trying to make a recovery, but we don't really have a strong indication that we are ready for a pump or that we are ready for a dump. So as I say, sometimes it's actually better not to take a trade. Don't overtrade, don't try and push it. Now this is Bitcoin. Over the next few days, what I'm expecting from Bitcoin, this is the daily. Stochastic Rsi is oversold. We have this bullish cross here in the oversold region, so we are it's indicating that we are starting a push on the upside. We are starting somewhat of a recovery. Let me make these lines red here because these are our challenges on the way up. Previous support levels that have now become resistance levels. This is the first one that we are challenging right now, and we'll see if we get rejected from here. I personally feel that we might get rejected from here. We don't really have enough volume, unfortunately, so this is not a good indicator. The markets are also still bearish. We have this bearish cross that we printed a few days ago, and we are continuing that slump on the downside. A slight curve in the blue line we are seeing here that could start it indicating a push on the upside, but as you see, it's actually, we are canceling this. It's actually starting to go down again. So not great, not a very strong performance. I don't really see enough strength in the bulls to actually push us on the upside. Mind you, the 19,500 level could be reclaimed, but the 20,000 level remains a stronger resistance. It is a round number, it is a psychological resistance, so this is not a great indicator for us. If we look on the slightly higher time frames, this is the 3-day. Well, we do have that 9th moving average acting as a resistance right now, and it is sitting at 19,900, so pretty much 20,000 is this 9th moving average. It's really going to be quite a struggle to reclaim that for the moment. I mean, for the last week, and these 3 candles, this is the performance for the whole past week, because on the 3-day chart, you know, this is 9 days, so slightly more than even a week. But as you can see, every time we have these long wicks on the upside, and they really just get to the resistance point and we get rejected. Here we broke a resistance point briefly, but we got rejected. This last candle for the last 3 days, we got rejected again from this resistance point. And these resistance lines I was drawing based on Fibonacci levels, not based on the performance. So, you know, the fact that it's perfectly touching this resistance line is because all of these other traders are also seeing these resistance lines. They know how to draw Fibonacci levels, and they're going according to that. And lastly, looking on the weekly, again, not bullish at all. The Stochastic Rsi is in the overbought region. Very soon is going to start dropping. I mean, it could actually go slightly higher and cross this line, which will get it into the severe overbought region. But this Stochastic Rsi is indicating that we can expect a further drop. The markets are looking better. You know, they're slightly more bullish than that. You know, they're on the lower end and they printed that bullish cross, so they're going on the upside right now. But this is the weekly. We could actually see at least another couple of weeks of consolidation, and the markets are still going to be going up, or we could even see a drop for a few days, and it's not really going to get represented in these markets on the weekly. So definitely not exactly the most bullish chart here. The weekly, the longer term, this is not great for us. We are failing to even reclaim the 9th moving average. And if we look at some other moving averages, for instance, if I turn on the 21 and 34 moving average, weekly moving averages, then we are getting even more bearish perspective, because these moving averages, and it's these two that I'm talking about, these are the important ones when we look on the weekly. We need to reclaim the 21st and the 34th moving average if we want to start a recovery, at least the 21st moving average, if we want to come out of this bearish trend. So while we are below this moving average, we are bearish. We are continuing that bearish trend, even though we are kind of going sideways here. If you know, for the last few weeks we are moving between support and resistance being 22,000. So this is a range here that you can call it somewhat of a consolidation. But until we actually break above this 21st moving average, we are not going to turn bullish at all. So we are continuing this bearish trend. If anything, we are just consolidating for a period of time, but a drop is still quite likely to happen. And here's Ethereum's weekly chart. Again, we are below the 21 and the 34 moving averages. We need to reclaim at least the first one if we are looking into any form of recovery. And right now this moving average is sitting at 1700. At this point, with this weak volume and with this overbought RSI, this is Stochastic RSI, again very similar to the Bitcoin Stochastic RSI. It is in the overbought region. It's not above the line, but it is very close to it, and it's making that bearish cross, indicating that a further drop is also a very likely scenario right now. Okay, and let's take a look at XRP, because XRP has been pumping quite a lot over the last few days. It did over the last couple of days, it did 43% up, and today it's having a pullback, so it's 27% up. in the last couple of days. But let's see if these articles are correct about, going to $1. Well, from what we are seeing on the daily, not quite so. I mean, Stochastic Rsi severely overbought, printing a cross that is a bearish one. So very soon we are expecting a pullback. Simple Rsi, overbought region as well. And we haven't been there in quite some time. We haven't been there since February. Last time we touched this level, 8th, 7th and 8th of February this year. Since then, we haven't been in that region. So definitely this is pointing towards a pullback. The pullback already started, but it will be more of a pullback. This is not it. We've not completed this pullback, not at least until we drop in the Stochastic Rsi, at least here in the middle region. So a few more days of a pullback is expected in XRP. This is why I'm not jumping in that trade. If anything, if I decide to go into XRP, which for the moment I'm not really keen on it because we're still waiting for, the court case to be finalized. We'll see if, what will be the verdict. It could be detrimental to XRP. The MACDs are also not looking bullish at all. They are very far apart, and the blue line is very high here on the high end, meaning that very soon we're expecting that they need to start contracting, they need to start getting tighter, and this will happen as the red line is going upwards. The blue line will start going downwards, and this is how they're going to contract, and they're going to, because they don't really stay apart for too long. As they come apart, very soon after that we see some moves that are bringing them together, and this is what I'm expecting here. The next move will really bring these two lines together, and because they're on the high end, this will be a bearish cross that they will be printing, indicating further downwards price action. All right. The one bullish thing that we have going for us is that bullish cross here in the 50th and the 9th moving averages, but this is not enough, because this bullish cross can easily be cancelled with some bearish price action. These moving averages can get tied together again, and they can print a bearish cross. We've seen that many times. We actually had a bullish cross here. Let me just stretch this a little bit so you can see it clearly. We had this bullish cross here, and very soon after that we had a bearish one, and the bullish cross coincided with the peak. Since that bullish cross, we didn't actually see any higher price action. So sometimes the crossing of these moving averages is not enough to indicate a bullish price action. They are a lagging indicator, of course. They're already showing us what is previously happened, and we can use them to try and predict what's going to happen in the future, but it is a lagging indicator, meaning that this bullish cross was very good for indicating this bullish price action over the last few days, but it is not enough to indicate that we will continue this bullish price action. And because they are far apart, I'm expecting that a pullback is going to happen that will bring them tighter together as well. So this is what I'm expecting. On the way down, let's just quickly identify some key support levels. Alright, so the first one we've already gotten there. The first that we are expecting to drop to is going to be 46 cents. Now, are we going to stop there? Most likely no. We do have a second support level, the 0.50 Fibonacci, which is at 44 cents. And let me just make this green, because these are support levels we're talking about, we're not talking resistances. And golden Fibonacci is sitting at 41 cents. Most likely this is where we're going to come down to. We could even go lower, especially if Bitcoin and Ethereum start dropping. I don't really see XRP pumping during that time. This brief pump here is already exhausted, even though we did have some decent volume, spike in the volume here, but weekend is coming, volumes are down on the weekend, so I'm not really expecting to continue this pump. Coming down to the 40 or 41 cents, to me, this is the most likely scenario. It makes the most sense to me, and this is what I'm expecting. This will coincide perfectly with, a drop in the stochastic and the simple RSI, something that we need to see, because these indicators, they don't really stay here in the overbought region for too long. So this pullback could be ideal for those who missed this pump and still want to get into XRP. I'm going to stay on the sidelines for the moment. I'm not jumping into XRP. One of our sponsors is Token Metrics. I chose them to be one of our partners specifically because I use this website a lot in my marketing analysis and research. If you want to know when is the right time to enter a position on any coin or token, and more importantly, when to exit, because this is really the difficult part. There are loads of metrics here to help you with that. This is one of their new tools that helps me analyze the market better and spot the right entry or exit points. As you can see, it gives you a green signal when the market turns bullish, meaning we are in an uptrend, and the red signals indicate when the market has turned bearish. Thus, exiting positions and preventing losses becomes really easy with this tool. There are so many tools that you can use. Here's another one, the out season Bitcoin season indicator, that gives me a very good idea if it's time to diversify into outs or should my focus be on Bitcoin instead. There is no need to be a back holder during a bear market. I think by now that much is clear. And with this tool, it's a no-brainer. They provide in-depth data and stats on all cryptocurrencies and a lot of new upcoming projects, launches and token sales too. This is where I find unknown gems before they hit the mainstream, and I particularly like their emails with detailed breakdown on technicals and fundamentals on the projects that they research, and their expertise in this field is second to none. You can also customize your portfolio and track your P&L day to day, and you can create separate portfolios for different exchanges that you use to monitor your progress in the most efficient way. There are so many categories to choose from when analyzing the markets, way more than I've seen on any data aggregator website, so you can really advance your analysis and improve your investment strategies. I've been a premium member of Token Metrics for the past 2 years, and I'm using it on a daily basis. They send us emails, host webinars and podcasts with technical analysis, and they go deeper into the research of new projects or current market conditions. I find this really helpful in my own market analysis, as they give me a hint to things that I might have missed or overlooked otherwise. They offer a trial period and you get a 10% discount and a free ebook with my link, so go check it out, it's in the description below. Alright, well, this wraps up today's technical analysis. I hope this helps you, and if it does, show your support. Leave a like and a comment below. Help the algorithms pick up this video so that it can reach more people, and also share it with your friends and other people who are in crypto. Also, don't forget to check out my next episode where I'm going to show you that NFT hardware wallet, the first NFT hardware wallet. I just received it and I did an unboxing and setting up. I showed you also how to receive your NFTs in that wallet so that you can store them safely, because let's face it, MetaMask is not the safest option for storing your NFTs, and many people are storing them on MetaMask because they use MetaMask when they're buying them. And with this hardware device, you can actually buy your NFTs directly from OpenSea or Super Rare or any of the other popular marketplaces. So it is a great device. Make sure that you catch that one. Thanks for staying until the end of this video. Make sure you're subscribed, and while you're here, just pick another one of my videos. I'm gonna see you in the next one.